Yeah, it is actually quite a wide variety of different things that I've done. Being born and raised out here in Las Vegas. How many people are actually from Las Vegas that are in the crowd? Do we have any natives here? No. Woo! Right? That's the point. Yeah, only about 25% of the Las Vegas population is actually from Las Vegas. I grew up on the east side, kind of the lower economic area. I went to Chaparral High School, went to UNLV, studied kinesiology. Unfortunately, what most UNLV grads do is they don't actually go into that into that profession. It's more of a practical application than anything else. I worked across the strip for about 10 years. I did 5 years at Planet Hollywood Pool, and I did 5 years at Omnia nightclub as a model beverage runner. Omnia's was the #1 nightclub in the world. I think all 5 years that I was there. Had like Calvin Harris, Tiesto, all the big EDM DJs. So that kind of really taught me a lot about the culture, how networking exists and relationships. When I graduated UNLV in 2015, I got into my first business endeavor was an antique store. I owned and operated with my father over by UNLV for about 2 years. Second business was called Chameleon Verified Network, which was a ticket application. I was a big raver. Do we have any ravers out here? I love going to EDC. It's probably one of my favorite holidays every year out here in Las Vegas. We had got scammed with the first year that we went, and so we wanted to solve the ticket fraud application process, and so we tried to create an app that you can verify tickets, and it is more of a consumer-to-consumer type thing for verification. Fortunately, both of those businesses failed, and then I got into crypto in 2017. When the pandemic happened, the nightclubs closed down. Vegas was the highest in unemployment. I believe it was like over 30%. I realized that there was this huge dynamic shift that was happening in the world at the time. Most people were moving to Zoom. Telehealth was happening. There was a massive boom in TikTok and social media, and so I realized that I needed to get a voice out on the internet. I was always a big fan of Twitter, but I realized that you needed to have some sort of specific medium. So I started a podcast in 2020, in April 2020, called The Guest List at the time. It actually featured just Las Vegas entrepreneurs. I had realized that looking at all of the different Vegas podcasts, traditional media, most of those people looked towards the things that were happening on the strip, the entertainment, talking about what CEO is cheating on his wife, or what new menu item is happening at this casino, but nobody was ever talking to the entrepreneurs that existed in the city. And so that kind of set out my goal. I started the podcast, and within about 6 months, it became one of the top shows in the city. Interviewed everybody from Andrew Yang, the former presidential candidate, to Jeff Sailing, who's one of the co-founders of StartupNV, to low-scale content creators, to pretty much anybody, really just trying to get a gauge on like what was happening here in the city, where things were going. And of course, my passion always had been crypto at the time. Became very fascinated with it, which we'll dive into in a second. In 2021, my passion just became swirling more. I started a company called Native Research, which was a Web3 consultation firm. I was hosting crypto meetups at Blackfire Innovation from 2021 through halfway through 2022. Yeah, we have partnered with Jamie Schwartz, and at the time, we were actually the only crypto meetup at the time. We got a lot of interest from different casinos, gaming control board members came out, politicians, pretty much everyone from every organization, NGO and not. And it really helped me believe that Vegas specifically can be a crypto hub, because there is a lot of parallels that happen between Las Vegas and crypto, which again, I'll go into in a second. That business closed down. I realized that talking with these different casinos, I'd go do videos. I was working with MGM, Circa, talking with the city of like how you can apply crypto to your business. Most of the Vegas casinos are not ready for crypto. They see it more as a marketing expense more than they do as an actual profitable business endeavor. I do not agree with that at all, but it was then at that time that I realized that I had to focus a little bit more on crypto, and maybe instead of bringing crypto to Vegas, I bring Vegas to crypto. So right now I actually work for a company called Emblem Vault as a partner. Emblem Vault is a Web3 tool, which if you don't, it's like a Swiss Army knife. It allows you to trade crypto on other crypto, it allows you to trade NFTs and crypto on other blockchains that aren't from it. So for example, it allows you to trade Bitcoin NFTs on Ethereum, right? Or it allows you to take Dogecoin NFTs and trade on Bitcoin. And this type of technology does not exist anywhere else. There's a lot of complications around it. And so throughout Emblem Vault to this day, if you go on OpenSea right now, it's actually trending in the top 10 on OpenSea in volume. I think it's about 200 ETH in volume today. But overall, over the last 2 years, Emblem Vault has traded about 40,000 ETH. So it's about close to $100 million in volume over the last 2 years. So putting up some numbers for something called historical NFTs, which is digital antiquities. Sounds pretty chaotic, right? Since crypto has only existed for 13 years. But that interest led me to Sotheby's Auction House. I sold 3 NFTs, excuse me, at Sotheby's Auction House. At the end of 2021, I got to meet Paris Hilton, Steve Aoki, and a bunch of crypto entrepreneurs. Sold some NFTs there. Really, really cool experience. And also just very crazy that, I was flipping antiquities in the real world, and then 2 years later, I was selling digital antiquities at the biggest auction house in the world. So it was a quite wild time. And throughout this whole experience, my podcast has shifted. And it really made me realize that crypto is a tool just as much as it is a speculative investment. You can take Bitcoin, for example, and you can view it as digital gold. If you're somebody who's in the banking system or you're a financial planner, you can use Bitcoin as a hedge for your investment, for volatility. Or you could go long on options and try to, change your life. Or you could go down the NFT rabbit hole and realize that where the Zoomers, Generation Z, is going, they spend 12 to 16 hours a day on the internet. And so you have to prove that you own something on the internet. Right now, that before NFTs, there was no way to prove that you created a meme or took a photography picture. The way that you did it was you put a watermark on it, right? But now with the technology that exists today, with AI and Photoshop and editing, you can completely just erase that watermark and you'll never know. So you need something like a decentralized ledger to prove that that person created the meme and to get royalties and all these different things. And so it really gets my mind spinning. And I want to say throughout this conversation, if you have questions, please raise your hand to do a Q&A. I've spoken across America on different stages about crypto, about historical NFTs, entrepreneurship, all this stuff. And I've realized that most people don't just want to be told about crypto. It's better to be engaged and answer these different questions that are happening, because I could sit up here and say different buzzwords. I could say NFTs, metaverse, blockchain, decentralized ledger, moon, Lambos, all these different things. And if the point isn't getting across to you of like what the practical applications are for crypto, then we're not really going to get anywhere. I don't think that crypto is going anywhere. I think it's here to stay. Yes, it is very volatile, but when you look at the beginning of any sort of asset class, whether it's the beginning of the stock market, the beginning of options, the beginning of the music industry, all this different stuff is very volatile because you don't really know what it is. So is there anybody here that does not believe in crypto? Does anyone here think it's a scam? Nice. What would be your main objection to it?
First of all, most people, as far as I'm aware, have no idea how it actually works.
Mm-hmm.
Actually, when I first met you some time ago, you described crypto to me as photography. That's my background. So often in my interactions or out in the world, it is just a way to make money. Mm-hmm. So understanding the actual functionality, what does it actually mean to have a proof of stake versus a proof of work versus all the other means are. So I'm concerned that it's magic, it's mechanical certainty. Mm-hmm. So I am looking from afar at this time.
Okay.
As best you can, we do have an online audience. As best you can you summarize the questions that are asked for the online audience? That way it comes in through your microphone.
Yeah, absolutely. So the question was just if there's any naysayers there. And it's definitely warranted to stand back from crypto, right? When you see monkey pictures that look like they were created on Fiverr selling for $500,000, it makes you be very skeptical, right? Or you see Lambo boys running around in Lambos, trading at JPEGs of Pepe, or people talking like Sam Bankman-Fried, who is one of the largest embezzlements in American history, or even the world history, talking.
I'd go beyond embezzlement. He did a little bit more than that.
He did, yes. Yeah, and that's actually a product of just fraud. It's not even just a product of crypto. That's something that he was taking customer funds. Basically, if you had a bank account, if you were putting your stuff in a bank, it'd be like the bank taking all their clients' money and then go giving it to their hedge fund bros, and then the hedge fund completely blowing it and losing everything. That's, in short, what happened, but a lot more complicated. Yeah, so what was your name?
Donald.
Donald?
Yep, but it's not really limited to that, right? I mean, anybody, there's no barrier, right? Anybody can go out there and create a crypto token, a crypto coin, whatever, and then do a rug pull, right?
Yes, yeah, absolutely.
If they have a marketing engine behind them, they can pump up a crypto, do a rug pull, and then they end up taking all the money and leaving you holding the bag. Where is the sovereignty in it? And I don't mean sovereignty in the sense of like a government oversight or anything like that. But where is the sovereignty to maintain the value store?
Yeah, no, very, very warranted question. So it was. Sorry, for the online listeners, is discussing the idea of influencers pumping and dumping, and basically being the marketing engine behind these tokens. Anyone could go deploy cryptocurrency now with the tools in about 30 seconds. And so you can go say, hey, this is Jake Coin. I can then start promoting it as, hey, this is the next biggest thing. I'm going to put my lifeblood behind it. And then once it hits a certain price point, I can sell and probably retire. Yeah, I'll talk on it in a second.
Mine's a little bit follow-up is, so I understand where he's coming from, and I think it's an educational standpoint, because I was a previous stockbroker, Series 7, and it's no different than somebody pumping and dumping a penny stock. It's no different. You know, like, what's the entrance fee to get listed on the pink sheets? 50 grand, and then you got a stock, and it's tradable. You know, so, and I mean, we have Enron and MCI, and how many other frauds, and these were like on the stock market, and they were regulated. So when you look at crypto, you really have to look at the people behind it. And it's just, the more people you have getting into anything, anywhere, you're always going to have bad actors and bad apples. And this guy just so happened he blew up his eBay. He got caught and then the cookie jar.
Right, and he was Joe Biden's second largest donor, right? $70 million donated to politicians, which now they're trying to claw back. But yes, pink sheets are actually pretty comparable to what's called altcoins. Altcoins is anything that's not Bitcoin. Bitcoin is the de facto gold. If we could go down and kind of describe it, and we'll get into kind of like crypto for entrepreneurs. And it's actually turning into crypto for creators. When you move into Web3 is just the buzzword, but when I say Web3, it just means like this like purely digital economy. Entrepreneurs are viewed as creators. The tech bros are considered the YouTubers, or somebody who has like a big channel. The devs are the engineers who are going and instead of building the roads, are the ones that are building the digital roads that exist behind the smart contracts. So there is a little bit of different terminology, but it's all pretty much the same, because you just gotta envision the future again where the majority of individuals are living purely on the internet. And so you start thinking about that, and this is where you get into the differences of what a cryptocurrency is and what an NFT is. Who here would like to raise their hand and take a stab at how they would describe an NFT?
So for me, I like to draw analog equivalents to kind of define new digital terms. Right? So in the case of a non-fungible token, we've all been interacting with NFTs our whole life. Quite literally, your birth certificate would be an example of a non-fungible token, right? So for example, if I take my birth certificate and I exchange it with you for your birth certificate, we didn't have an equal exchange. We don't end up with the same value we had before. Whereas if I pull a $20 bill out of my pocket and exchange it with you, it's fungible. Swap it, right? So we've been interacting with non-fungible tokens since our birth certificate. We see it with airline tickets. We see it with concert tickets for a specific date or a specific seat. Right? They're not equally interchangeable in the way that a dollar bill or stamp of equal value might be.
Yeah, precisely. So the difference of fungibility and non-fungibility, when you look at, again, Web 2 is just, literally it's a crypto term just referring to anything that's not crypto, right? Just as like an altcoin is anything that's not Bitcoin. When you're thinking about just a traditional sense, that's also something that can be synonymous with Web 2. In the traditional sense of fungibility, fungibility is purely created by humans. It's mostly pertinent to currencies. If all of us have a $100 bill in our hand and we all throw it in the air, anybody could go grab a $100 bill and it has the same exact value. Now, for example, if we all had our IDs and all threw them in the air, I can't go grab anybody else's ID and go use it. That's the idea of non-fungibility. It's a unique one-of-one type item, and there is a middle ground of semi-fungibility, which is the idea of baseball cards, where you have 100 of the same baseball card, but it's still in kind of a limited, scarce classification. So kind of understanding these different dynamics, it gets applied then to crypto, where fungible tokens, right? What is the currency of the internet? That would be Bitcoin, at least for now. If you could take, there's 21 million, or there will only ever be 21 million Bitcoin. One Bitcoin can get split down into, it's called 100 million sats. A sat is a Satoshi. And if it's comparable to like 1 cent in a $1 bill, or there's 100 cents in a $1 bill, there's 100 million sats in 1 Bitcoin. And so Bitcoin goes down to the 8th decimal point. So you start seeing a lot of these similarities between the real world and the digital world. Yes, it's complete new terminology, but there's a lot of the same things there. So when you go move to non-fungibility in the real world, every single human, an ID. Sometimes even people will debate that a dollar bill can be non-fungible because they all have individual serial numbers. But this is, non-fungibility tends to refer to value mostly, and it depends. There's definitely some nuance in it. Yes, sir.
How do you know that an NFT is not counterfeit?
Ooh, good question. Good question. How to determine that an NFT is not counterfeit? It's simply verified by the blockchain. So when you look at NFTs are something that's built on blockchain technology. Anytime an NFT is minted or created, there's basically a timestamp that's put on this decentralized ledger that anyone can look at that shows who the owner is, who's the possession of it, and the time that it was created. So that completely eliminates the, somebody could go create duplication, but the fraudulent, you always know who's the first one. Now, since it is an open source database, you could create, I'm use CryptoPunk, for example, or a Bored Ape, which is always what's in the internet. There are 10,000 Bored Apes in this one collection. Somebody could go mint the same exact thing on another, or like on their own smart contract, but you're gonna know who the owners are of that contract. So that's the big difference here is the decentralization versus the centralization, if that makes sense.
Well, it does, but for example, if you have number 8,427 Bored Ape, and you counterfeit that, but create a new image and a new blockchain entry, and maybe there's 2 bits different that aren't visibly different, but they're different. How does anybody know that that's not a legitimate one of the representative sets?
Yeah, you have to. So you have to go look at the ledger to verify it. So you do still have to verify it, but that's why it's there. Is that anybody could go look into this decentralized database to go look at it. Where's the difference of, let's say, Blizzard, who creates World of Warcraft, has issued a Warlock from 1996, and then they go issue it 20 years later. You can't go into their database to go verify what is what because it's centrally owned. Where here, anyone can go verify it to make sure. Of course, you still have to do your due diligence, and that's how a lot of people get scammed, whether they're just not aware of how to operate this back-end technology, or they are just too lazy or get caught up in FOMO, which is something that I could talk about. There was a question back there.
So you kind of glossed over the fundamentals that I was looking for. So verifying on blockchain, what does that mean? I I know what it means, you know what it means, but the casual user is my mom to use an archaic reference. Does my mom know how blockchain works? No.
Yeah.
When somebody says, now I will say I'm not a fan of crypto as money, as a currency, but as a transaction medium, I think it's good. I think blockchain is very interesting for that. But the casual user doesn't understand what it means to have a cryptographically secure verification, as a hash, as a nonce.
Of course.
So because they don't know what it means, verifying on blockchain could be as simple as I got an email from somebody from Russia that said click here.
Yeah, I mean, it's kind of the same idea of like go ask anybody how the repo market works in traditional finance. No one really knows, you know. So, and that's actually a more of a gated term that is only privately operated. Where here you can actually look for it, but don't get me wrong, the UI and the UX for crypto is abysmal. It's terrible, right? It's even complicated for me sometimes to go look for it. Granted, grandma, right, to go figure it out. That's why you have things like Coinbase that are so trusted. Or unfortunately, this is why people go to things like FTX, because they put together a centralized service that is sleek and understandable, and then they take advantage of people.
So nobody's voicing the repo market out in the future. That's kind of a how's arms, right? So, hey, this is the future of money in Web3. How does it work? Well, don't worry about it. Right? So that's my concern. And I'm not picking on you for this, but it's just my concern is that it's magic. And
yeah, magic internet money. That's the memes for it. Yeah, of course. There are, again, because it's only 13 years in creation, decentralized, and the UI sucks, there is a lot of hurdles to it. But I mean, again, using just traditional finance and politics, right? I think a lot of people got a rude awakening that the Federal Reserve can go print money and go expand the M2 supply by 40%. I'm sure most people don't know how that works, right? How there's that intermingling.
most blockchain people don't know either.
Exactly, that's what I'm saying. So a lot of these things, like just because there's a limitation to understanding doesn't mean that it's a scam. It just means that the right type of content's not out there. But yes, crypto is rife with scammers because they take advantage of those people who don't know how to go into something like Etherscan. Etherscan is what's called a blockchain explorer. It's almost like a Google for blockchains, where you could go and type in any transaction and it'll pull up all the information for it. Operating that where everything is listed in like hexadecimals, right, and strings of 26 characters of letters and numbers, right? That is absolutely confusing. There are people that are actively working on it. But this is also where some of if you're a value seeker, this is where a lot of the opportunity and value comes from because of the arbitrage of the limitation of information that exists. In the back?
Well, Jake, if I may, before we're going to go gentleman in the back and then a gentleman in the front.
Mm-hmm.
I do want to lend. This is a great session of what we wanted. It's like a ganging up on Jake and then.
No, it's fine.
But what I do want to allow is probably 5 minutes here. Are there any other additional points you want to add or anything you want to get caught up on before we dive into the next level of questions? And of course, we'll come back to you, sir. I apologize for interrupting. I just want to let you
Sure.
Jake, if you have any.
Yeah, we'll go on. Well, I'll go on for like 10 minutes. I try to when I talk to different groups about entrepreneurship and crypto. It sounds pretty chaotic because again, it's tough to really understand. I try to do like a widespread approach because most people who are creators, they express it in a variety of ways. Maybe they're a gamer, so the metaverse is more applicable to their entrepreneurial approach. Maybe they're an artist, so creating or taking their art and putting it as NFTs is more applicable. Maybe they're an engineer and they want to go build smart contracts, and maybe then they could take a smart contract that can go improve their legal business and maybe eliminate or automate some of those processes. So when you look into crypto, again, Bitcoin, you think of it as the base layer. Bitcoin is the gold standard of crypto. It's basically the gold of the internet. And then you have something like stable coins, which is a representative of a US dollar in a crypto form. Most of these stablecoin issuers are they're under siege from the US government because they're supposed to have $1 in a bank for every $1 that's issued. out there as a stablecoin. Of course, there's a lot of controversy there. So you start seeing crypto as kind of these like money Legos, where things are getting plugged in and getting built on top of each other, which then opens up this like whole ordeal of expression. So you move into Bitcoin as gold, you have stable coins, which are dollars, and you think about just kind of like where society is going and how it's evolved. When society had the ability to create value and they can transfer it safely, then this is where the entrepreneurs came in, because they're like, okay, I could transfer value to this person, or I could go build value, I could go build these businesses that people will then go, that will be interested in and they'll want to build. So actually some of the first applications that were ever built once these two things were established was something like a smart contract. A smart contract platforms was pioneered by Ethereum, which is the #2 cryptocurrency. It's basically a contract that issues a if-then transaction. If this happens, then this will be the result, and it's automated. So if I go pay, you could have something like a smart contract where it's like, if I pay Bob $5 on this date, then Bob will then, or if I lend out Bob $5 on this day, he owes me 5% interest in a month. If he doesn't pay that interest, then it's the money is repossessed, or the collateral that he put up is repossessed. So there's this idea called DeFi, decentralized finance. Is there anybody who trades, is a trader, or manages like borrowing and lending, or trades options or stocks or anything like that? Is there anyone who has a Charles Schwab? We got one stock trader in here. I love it. So
Everything.
that's, yeah, right, commodities, all the stuff. So the first things that ended up being built on top of these smart contracts was this ecosystem called DeFi, where they basically started taking all of these financial instruments, basically options, borrowing and lending, margin trading, issuing bonds, decentralized insurance. So entrepreneurs, they went out and they saw like, hey, I have a smart contract, I can go build value somewhere. I'm going to go take essentially all these financial instruments that exist in the real world, and I'm going to try to build a decentralized version of it. Now, just like startups, 99% of them went to zero. Probably a large amount of them were also scams that were just masked as Jakecoin, who they just put an influencer behind it and said they're going to be the biggest borrowing and lending platform in the world. Realistically, it was just, Logan Paul rugging his audience, right? Which is what he did with CryptoZoo, if anyone's following that drama. Yeah, CoffeeZilla. Yeah, he's a hilarious guy. So DeFi was built, it began being built in about 2015-16 and really took off in 2020. And as crypto is built and as all these entrepreneurs see these emerging ecosystems, or you could call them categories, being built, there's usually some sort of new innovation. If anyone's following the news, recently, the US government has gone like a full onslaught on crypto companies. There's this idea of staking, which is basically what banks do, which is just a yield-bearing bank account. You lend the bank, or you deposit $1 million in the bank, they give you 2% APY, and so then you get $20,000 at the end of the year. This is basically what staking is, but instead of having a bank as an intermediary, you're interacting with a smart contract. So this is like the whole, this is like the evolution of finance. They call it DeFi. So staking, again, is just a yield-bearing account, but there's just one more process in between. So again, you start seeing the same things. Oh, yield-bearing account, staking, new term. Instead of interacting with a bank, you're interacting with a smart contract. And so then the next thing that ended up being built was NFTs, right? The big thing that everyone loves, and this is where I spend most of my time in. Because when you think about the real world, NFTs, or the non-fungibility, makes up 99% of the world. Brian Armstrong, who created Coinbase, the only publicly traded crypto exchange and custodian, he believes that their NFT platform and NFTs will be magnitudes more, or will be much more valuable than the entire ecosystem of crypto. So he thinks the total market cap of cryptocurrencies, which is $1 trillion, he believes NFTs will be much multiples higher, because you start thinking of what can an NFT be, right? So if you start taking things that exist in this real world and start turning them into NFTs, The primitives were art. For example, we saw at, I think it was Christie's, the $69 million NFT sale, which everyone thought was absolutely crazy. I still think it's absolutely crazy too. But the reason why is because since you're living in this completely digital ecosystem, you're not bidding or purchasing things in dollars. You're purchasing in things in the native currency. And so for this was ETH. And so you're bidding in things that is a volatile asset to begin with. So paying, I forget what it was, I think it was like 70,000 ETH at the time, equated to $69 million. But there's definitely that difference of paying 70,000 ETH versus paying $69 million. So this is a lot of where that delusion and confusion comes from. 'Cause like, I don't get how somebody could pay $69 million for something. Meanwhile, they probably have like 700,000 ETH because they've been in it for a long time. So it's all percentages, and that's where it goes. But NFTs started out as art, and then people started dabbling with gaming. They said, and this is where they think the biggest breakout is going to be for NFTs, is the gaming sector. For example, the person who created Ethereum, his name is Vitalik Buterin. He created Ethereum, or he put out their white paper in 2013 because the story is, and he confirmed that this is true, he had been a World of Warcraft player his entire life, and his character that he had been leveling up for X amount of years was repossessed by Blizzard. They never gave him a reason, but he said he felt so frustrated and he was so sad that he'd been working on this character for so long, spending hours and hours a day doing it, that the centralized company could just come in and take it away. And he said this is when he realized that you needed decentralization, because if he owned that asset, then Blizzard can't repossess it. So you start thinking in gaming, the biggest example that we could give that most people understand is this idea of skins or avatars. If you are playing Fortnite or whatever game that you're playing, you're wearing clothes in this game, right, that you can pick out inside of the wardrobe. But what if each piece of clothing was an NFT? And what if I could take this NFT and then wear this Steph Curry jersey, not just in World of Warcraft, but I could go wear it in Call of Duty, and I could go wear it in The Sims, and I could go wear it in this game, which you can't do to this day. If you go buy something in The Sims for clothing, you can't go take it into Call of Duty because it's different games. But if that clothing is an NFT and it's interoperable, which is another buzzword, then this is where you start unlocking all this value, because you can go take this across different blockchains. You can go be a fashion NFT company. You could go build digital clothing, which actually a lot of the big fashion brands, Louis Vuitton and Gucci and all these, are actively looking into, because they're thinking this, oh, we could turn our stuff into a luxury brand that can be in literally any metaverse, which is the next big buzzword, right? We've got Jamie in the back who's working in it. The metaverse is a buzzword. It's so much of a buzzword that Facebook literally changed their company to Meta. Mark Zuckerberg said that he had been thinking on this idea for a long time, and I actually think he's true, because he had been trying to build the VR goggles for it and all these different things. He believes that the metaverse is the next social layer. But the metaverse has been around for 20 years already at this time. Twitter is a metaverse, right? Roblox is a metaverse. Any sort of digital economy that has a community can be a metaverse. RuneScape, if you ever play RuneScape and you go back and you trade gold, that is literally the original metaverse, right? That's where the in-metaverse economies existed.
But it's centralized.
But it is centralized, yes.
So it's not really a trade. I mean, you're paying them for skins, you're paying them for whatever.
Yeah.
You can't even sell those back to them.
But in RuneScape, you could still trade player to player, though. Yeah.
But you can give to a player, right? But from my understanding, my kids play this stuff and they spend thousands of dollars on it. Mm-hmm. And when they're done with it, they're like, you know what? I'm done with it. And my thousands of dollars, their thousands of dollars have gone along with it.
Yep. So this is the idea of NFTs, is that you could take that and then instead of using in that game, then you can go sell it in another game into another economy. But you start thinking of this idea of entrepreneurs, that you're going to you're not just going to have an entrepreneur who's building the infrastructure, you're going to have an entrepreneur inside every single metaverse. And this is what Mark Zuckerberg's focusing on, is this idea of the creator economy, where inside his creator economy, you have all of these new positions that are going to be created that are just pertinent to digital economies, because you don't have to be obstructed by gravity and some of these things that we're all held by in the real world. So it becomes like a very interesting idea of like, what exactly will be there? Like, how do you describe artistry in a metaverse? Whether it is this like Ready Player One metaverse, or it's just us walking around with our phone that's an AR that becomes an NFT of some sort, right? We're much farther away from this like Ready Player One than I think the investors would like to be, you know?
We're hopeful.
Yeah.
Jake, if I may, the gentleman in the back, I know you may have forgotten your question by now, but if it is still there, please ask away.
So how does NFT solve it's a technical question, how does it solve the problem of blockchains? Because, I could come up with a blockchain tomorrow. Somebody else will. All right.
Yeah, so NFTs exist on top of blockchain. Blockchain is the
So, if I spend $63 million, and buy whatever you said they bought, it will stop you tomorrow on a different blockchain.
Yeah, so
The same piece of artwork is owned by somebody else.
you're the only one that owns it, because it could be verified on this database that everybody owns. It's the blockchain's database.
Blockchain.
Is it a question of the inoperability? Are you asking, like, is the question about like how do they connect?
Okay, there's always the biggest threat to what? To
Crypto, I mean, they're all date stamped, right?
Yeah, they're all time-stamped.
So
Yeah.
you'd see which came first, and there'd be.
Yeah. Well, this is where social consensus comes from. And you think if you think Vegas is all about social signaling, the internet economy is all about social signaling. So Ethereum, for example, and this is getting a little bit deep, but Ethereum, it's kind of this like 80-20 principle, where 80% of the culture is going to exist on 20% of the blockchains, which is like 2 blockchains. So Ethereum houses the most of the innovation. So most people who are looking for something like social clout are probably going to go to Ethereum to start buying these like very expensive art abstractions in maybe just the art gallery form. But some of these other blockchains are beginning to get their own specialization, where something like Cardano is trying to work with governments to be like the not decentralized, like semi-decentralized blockchain that works with governments for them to go to, but they could get things done. Where Ethereum is just like pretty much as decentralized as you could get outside of Bitcoin. And so this is where a lot of the social culture is being built. So it's easy to actually, maybe not for everybody, but they're getting there to where you can literally just go, again, Etherscan, just like Google, go type in the asset that you own, and all the information will come up. It'll show like the trading history. Jamie, do you have something back there?
Oh, I had a question. Sorry.
Oh, you're good. You're good. Yeah, I know. It's a.
You're third in line. So we gotta get
Oh, sorry.
a question here, and then you.
Didn't realize the hand raising.
Yeah.
Oh, it was right here?
Yeah.
Okay.
So my question is, and you may have just alluded to it, but this idea of blockchain can sort of be replicated however you could put it on Ethereum, but you could create your own blockchain too. And in terms of what you were saying, in terms of contracts earlier, is there an opportunity for somebody who wanted to create a contained blockchain for a specific utility, in this case trading,
Yep.
right? I'm going to use trade credits or trade tokens to get physical goods, but those trade credits don't have, the only intrinsic value that they have is that they're a trade credit, and the community itself has established that a trade credit has some value,
Yep.
but it doesn't really, there is no analogy to, let's say, $1 until such time as you want to return those trade credits to the blockchain.
Yeah. So you're hitting on the right point, where you can frame a blockchain as like a country, right? And in order to get to create a country, you have to have a currency. You have to have some sort of value that you could transfer, and that's where the cryptocurrency comes from. And so if you think of something like Bitcoin, right? It's whatever the oldest country is, one of the European or Asian countries, it's the oldest that exists. It has the most gold, and so if you think of the real world, wherever the most gold is, there's a culture that surrounds it, right? Because that's the primary commodity there. That's where the economy is centered around this idea of like abstracting gold. So with Bitcoin, that's the kind of culture that exists on it, is the miners, right, who are trying to extract Bitcoin because through a similar process of mining, right? Whereas Ethereum is more, it's a smart contract. You could think of it as it's its own country, but it's also its own operating system. So it'd be like if iOS was its own country, or Facebook was its own country. That's similar to like what smart contracts are, because there are, or smart contract platforms, because there's more functionality to it. But you can create a blockchain for anything. I mean, Microsoft had their own blockchain for a little while called Hyperledger X, and it was a private blockchain that they used specifically just for internal supply tracking and for gaming. So you can be public blockchain, you can be a private blockchain. Of course, with public blockchains, this is where all the value is. If it's private, right, then you can't have investors come in and buy things up. But there are blockchains that are specifically just for gaming, like Wax. You have blockchains that are specific for supply tracking, like VeChain, which is a sponsor of UFC. You have Polygon, which is a blockchain that's specifically for scaling on Ethereum. So there are blockchains that exist for specific purposes. The early days of crypto, these blockchains that were launching, because the technology that didn't exist, most of the technology that exists today didn't exist, the only thing you could do is launch layer 1. They're called layer 1 blockchains. But now to launch a layer 1 blockchain is very expensive, to the T that the recent, I guess the most popular recent blockchain is called Aptos, which was actually taken from when Facebook got shut down, or when they were doing Libra and the government came in and shut it down. The employees got the IP from it because they're the ones that created it, and they went and took it and created their own blockchain. And they had like over $2 billion in investments to get it started, because you have Bitcoin that's existed for 12 years, and so to catch up to them, you have to literally somehow build that culture. The entrepreneurs, the economy has to be built in, and the only way to do that when there's things that are so far ahead is to buy things, right? That's like what most countries do. You look at Dubai, who comes out, or Dubai, right? They just come in with just oil money, and they come in and just start buying things and trying to build culture that way. So everyone kind of has their own way around it. If that makes sense. It's just they're all kind of specific, but I would equate blockchains to countries.
And Benjamin, if I may, Jamie, you had a question.
Sorry.
I just want to make sure we get all the questions. Your question will get to. Jamie.
No, my question was really about the to-earn model as it pertains to crypto. Game, play to earn, game to earn, walk to earn.
Yep.
I'm working on a plant to earn, the gardens, and how do we stimulate? So my question is really twofold. One, what are your thoughts on the to-earn model in sort of crypto, right, as the currency? And two, how do we see that kind of becoming a part of almost the digital twin, like what you're doing in real life, you're getting tokenized for in Web3 and beyond?
Yeah,
Jake, if you can.
I will explain it. Yeah. So the to-earn model is something that is a recent trend. It popped up through this game called Axie Infinity that started in 2018, which is this idea of play to earn. So this company, they created NFTs that exist as in-gaming assets, and then they had this thing called an Axie token, right, the cryptocurrency, the blockchain underneath, that exists as the fungible currency of it. And so the more that you play this game, the users get rewards, and you literally are getting paid to play this game. And so this was this idea of play to earn. Up into a point where almost 10% of the Filipino economy in 2021 was playing Axie Infinity, and up to the point where it actually got a minimum wage increase in the Philippines, because so many Philippines were not not going to their jobs because they were making more money playing this game, right? So it completely changed the economic dynamic that was there, right? This is entrepreneurs trying to solve something in a different country. Of course, people want to get paid. Of course, it also went down 99% during the crash. But it introduces this idea of like, okay, what else can you do with X to earn? So Nike's actually filed a bunch of patents, and there is a company right now called STEPN that exists on Solana, where you basically run and get paid to run, again with a similar model. But Nike's actually filed a patent for this back in 2018. So Nike's been actively observing this way of they want to integrate the NFTs into their shoes, and the more that you walk, the more you get paid in their underlying currency. And so there's all these different economics that pop up from these different models that get introduced. Yes, it's a very abstract idea. I mean, you even have you have crypto degens are like, oh, what else can we do to earn? Sex to earn, right? Right? Sleep to earn, right? I think there's something there. The most play to earn games that exist in crypto, the actual pay is awesome. The gameplay is absolutely horrible. The game's not fun at all, right? It's a little bit more fun when you're getting paid to do something. So I think that's here to stay. But what tends to happen in crypto is you get these waves, you get this new model that's introduced, and there's always the network effect. Generally in crypto, the first person to the market is generally the one that wins, because the network effects on the internet are just extrapolated so much that it's so hard to compete. Bitcoin was the first cryptocurrency, hasn't been overtaken. Ethereum was the first smart contract platform, hasn't been overtaken. And this just goes on and on and on. Monero is the first private currency, has not been overtaken. So Axie Infinity will probably continue on. They'll probably improve it. But I think that's interesting. Actually, I spoke at NFT Miami last year, and Mark Cuban was doing a presentation on his metaverse, again, buzzword. His idea was that the 40-hour work week is dead, the average traditional path to employment is dead, and that college degrees are dead. So he said, what do we do if everyone is going to be living in this purely digital economy? He said, so I'm going to create a metaverse that's learn to earn, because if everyone's living in this digital economy, you're going to have to retrain the population. And so he's creating this metaverse that has these digital jobs, right, these digital training areas where you could go and learn what your special skill is and get paid in this underlying currency to figure out what exactly it is and where your new position is. Are you a community manager? Are you a dev? Are you blah, blah, blah? Will it actually work? Who really knows? But it's a cool idea, and he's pretty far into it. Of course, he got wrecked too in some investments, as we all do. But it's just interesting to see entrepreneurs put their mind to work to think of these different ideas. And then after this question, I'll go through kind of like what the next trend is, and then we could do questions.
Excellent. Actually, we're going to have
a question. I don't want to step on.
Donald, real quick, if I may. We have probably 4 questions here. I have one from online from our.
Let's do online first.
We got to unmute the mic. So we do. One sec. We do have one question from online, and then of course we'll go Ben, then Dan, and then Donald, and then of course
Dan's man.
Another. So
Mine's not a question, mine's just a clarification on what you're saying.
Sure.
let's go with clarification first.
Sure.
Real quick, then.
Yeah, so the underlying currency that you're talking about is their token, right? Mm-hmm. So when you were talking about the Filipinos.
Yeah, Axie Infinity is called.
I'm sorry?
The game was called Axie Infinity.
Okay, Active Infinity.
But the Filipinos were the ones playing it, yeah.
So those folks that were playing, how did that supersede their
yes.
How are they able to buy food and things like that?
So any cryptocurrency that you get, so they're getting paid out an Axie token, you could then flip the Axie token into Bitcoin, which then you can sell Bitcoin to any exchange for US dollars or whatever their native currency is.
Okay.
So of course you have to have, It's like trading like foreign exchange kind of thing, right? Yeah.
Thank you, sorry for that.
No, you're fine.
No.
It's a good question. It's a good clarification.
Question from the online audience. I'm going to read it verbatim, and I'll let you do some interpretation here. What would you consider as the best platform or approach to build a blockchain solution that uses a security token to reward people/users for contributing their data to a software platform?
Probably Ethereum. That sounds like something you want to build on a smart contract. That or Solana. Those are the 2 top smart contract platforms. They do have some trade-offs. Ethereum, more decentralized, higher gas fees, which means there's there's a higher cost per transaction because of something called block space, which I'm not going to dive into that because that'll be like an hour. But it depends on, first you want to think about how many transactions per minute your platform's going to take. If it's something like gaming, then you're probably going to want to move to something that's not Ethereum, like Solana or Wax. But if it's something, again, building software and you want a high amount of security and you're not having, your throughput's not as high as something like a game where maybe you're doing 1 or 2 transactions a minute or maybe something a little bit less, then you're probably going to want to opt to Ethereum, and then you build on top of it. So Ethereum is essentially like an iOS or a Windows where you're building, it's called the layer 2 on top of it, just like an app with an app store, where if you go to iOS, you have the App Store, which Apple takes 30%. Here on Ethereum, the App Store is open source, so it's permissionless. There's nobody that's coming in taking 30%. You just have to pay per transaction for the security, which has to do with like mining and validators, which is another story.
Now from here we will move to, I believe it was Ben, and Dan. Ben, what was your question?
Bishop. Broad question. Would the whole cryptocurrency and non-fungible token world and system be helped by government regulation?
So Bitcoin and Ethereum will probably be okay. A lot of these other ones, maybe not so much, but this is the big debate. You have things called Bitcoin maximalists, which they are only for Bitcoin. They call everything else a shitcoin because of that outcome that could happen, where right now you actually have the US government's kind of doing a chokehold on crypto. They're coming after the centralized points, the exchanges. They're coming after the off-ramps, on and off-ramps of how to get money on and off. And they're suing these companies and putting them in litigation. But Bitcoin, because it's so decentralized and because of the Lindy effect, where it's this idea that if something exists, the longer that something exists, the more likely it is to exist. Because Bitcoin's existed for 14 years and no government's been able to crack it, then they think it's very unprobabilistic that Bitcoin could ever be stopped because of some of the game theory that's intertwined with it. So if you want to think of something like a doomsday, Bitcoin is definitely the one that you're going to want to have. A lot of these other ones, even Ethereum has some attack vectors where the government could come after it. But Bitcoin to this day, because of the mining component of it, is the one that you're going to want to have in case governments or the international, the IMF or whoever come after it.
Well, will it be helped if they invite regulation?
Will crypto? Yeah, there's people who are inviting regulation for it. The regulation that they invite is probably not the regulation that they actually want, right? So it's this ongoing battle. It depends what it is, right? The ongoing regulation is crypto security, or NFTs is security. Does the CFTC, is there the one who regulate Bitcoin because it's a mining, because it's treated as a commodity? But there does need to be some clarification because the U.S. financial regulatory bodies kind of sets the regulation for the rest of the world. But there is a concern in America and in the crypto space that if the government comes hard down on crypto, then you're just going to move these overseas, right? Because it is an international and open source ecosystem. America is having an issue with innovation. A lot of it's moving to offshores, to India, to China, to these different areas. So if you do strict that, then you're going to have a lot of these big entrepreneurs and the wealth leave America and go somewhere else. So that's kind of like this philosophical debate, but also keeping America at the top nation in terms of innovation and entrepreneurship. You don't want to cut that off and come it off too hard, but of course, decentralization threats the US government's power. So it is an interesting debate that actually never ends.
Actually, it never ends.
It literally never ends.
Ben, if I may, I'm going to move on to Dan. Dan, your question you asked.
I have 2 yes/no questions, and these other 2 are no questions. The blockchain thing, I don't know if you want to touch on the cross-chain economics and how you actually track a purchase through the chain itself.
Oh, sure. Do you want me to touch on that?
Let's go with that first. Let's do one question at a time. Question, answer, question, answer.
Well, the other 2 are just yes/no if you want.
Okay. So how do you track a cross-train?
No. The unanswer to the question about what if somebody just goes on another chain is presumably not only timestamps, as you said, but there would be a chain of ownership, chain of custody, chain of transactions. So if you just pop one up on another chain, so that's sort of a mechanics of how blockchains work.
Yeah, it is a mechanics. Yeah, there are. Yeah, there are block explorers for every blockchain. Of course, when you start going to these newer blockchains, the tech and the UI and UX isn't there. But everything can be tracked, but it is going to be much harder. There are companies called like Chain Analytics that actually works with the US government to track mostly the fraudulent activity across blockchains and using all these different protocols to make sure that you know where it is.
So on that note, yes, no, smart contracts tested in court yet?
Have they what?
Smart contracts tested in court.
Ooh, there's actually a few ongoing right now, debating. Yeah, so have smart contracts been tested in court? I don't think there's a provenance case so far. There are a few. Is there one? Oh, yeah, here.
Yeah, so a lot of contract tort law is actually state based as well. So if we look at Wyoming, for example, they do actually have quite a bit of precedent in this space.
Okay.
Whereas if you were to look at some other municipalities or states, they may or may not, right? But the reality is if you've got a willing seller and a willing buyer, and you've got a record of that agreement, you have a contract. And that doesn't matter if it's verbal with a handshake, if it's something that's recorded in audio, or something that's recorded on chair.
Like the Seth Green scenario would have been interesting like that.
Oh, is he the one that got his Bored Apes stolen, right? Is that?
So that version of the contract kind of looked, but anyway. So, okay, good to know.
Yeah, let's look at Wyoming, because they have the most activity.
Yeah.
Has the coupling between an NFT on blockchain and the associated asset, artwork, et cetera, been addressed, or is it still like two separate things? Like,
Yeah, so
I'm not
no, it's actually,
And again, Jacob.
so my client.
Question.
Yeah, so the question is
for that question.
is addressing the artwork and the token, right? So there's actually a big lawsuit happening right now with Yuga Labs, who created Bored Apes, is can NFTs be copyrighted? And it is this philosophical debate of, is the artwork the actual token? Yuga Labs, right, Bored Apes, their market cap's like $4 billion. They have these 10,000 apes. Somebody named Ryder Rips went and created 10,000 identical ones and sold it off for $1 million. And because there are some Bored Apes in that collection that have identical pictures, but the background color is different, it becomes this debate of, are you trying to copyright the image? But if you're trying to copyright the image, there are some same ones in this collection, so how can you copyright it? And then if it's not, then if the tokens can't be copyrighted, right, then you're kind of like circumventing the whole idea of what this means. So there is.
So if they're algorithmically generated, there's a whole question about is AI generated?
Yeah, so there's actually a Sotheby's lawsuit right now. One of my friends had sued them. So this guy, Kevin McCoy, sold an NFT at Sotheby's in 2021. It was called Quantum. He created it on this blockchain called Namecoin, which was the first altcoin. So this is right down like my historical NFT kind of niche. This guy, Kevin McCoy, this image was one of the first ever images, or it was the first GIF ever minted on a blockchain. So pretty historic when you think of just like if this technology is going to scale. But the technology it was created on was a token that expires. It was created on a domain system, right? Just like with .coms, it expires. So this guy, Kevin McCoy, he created this token in 2014. The token expired. Somebody went else and claimed that token. He went and took that same GIF, minted it on Ethereum, and then sold that Ethereum asset at Sotheby's for $1.5 million. And so the guy who went and claimed the token went and sued Kevin McCoy and Sotheby's, saying, hey, I own the original token. And Kevin McCoy is saying, I'm the artist, I get to determine what's real and what's not. And so this actually is being litigated to this day.
That's a super Saturdays question.
Yeah.
And then finally, just a minor thing, but it's relevant. The Oculus Kickstarter was Kickstarter. So there you have a Web3 meta. So Oculus was funded by a crowd. Mm-hmm. They did not get any piece of the meta Facebook buyout. So then there's a question of like any artist or any participant in any economy getting left out of the cold. So it's kind of like like moving forward, Meta is kind of ignoring their past, which was we kind of got the Oculus and you guys paid for it. So I mean they did, but you know what I'm saying, right? So it's an example of how early participation, can be rewarded, and all that stuff. So that I think is a legitimate piece of blockchain.
Yeah, go ahead.
I look at Bitcoin and everything else as two different, completely different. So Bitcoin essentially is a kind of a one-dimensional platform. The value of the coin is the value of the coin. But if you look at Ethereum, there's the value of the coin, which is questionable because it's centralized. But then there's the value of all the technology that underlies the coin and has all this potential value in the contract creation sector. So if you're looking as an investor, how do you look at an Ethereum and say, well, the coin makes no sense to invest because the guys who built it own 5 million or whatever, but the technology is not. How do you understand the value if you decide to take an investment?
It's actually a good question. So the question is basically how do you?
I'll second that because we see StartupNV.
Go. Yeah, please give me the expert.
We see a lot of VCs. Generally, there are very specific firms that will invest in coin, an actual coin of some nature. But most VCs will invest in a practical application of what we call blockchain.
Yep.
And usually just on some sort of platform.
Or a DApp, it's called. It's called a DApp, decentralized app. So that's like what exists in the App Store. Yeah, so just go on.
Yeah,
Clarification.
Exactly. And a lot of them are based on Ethereum. And so one of the questions that we ask all the time is, okay, what is the practical application here of blockchain technology? So I'm not going to admit anything else. I'm just going to say that my question is, how do you assess an investment opportunity like that when it's based off of, a stable coin?
There's no reporting of their fees or their contract terms with all people.
Not only that, but the technology itself is based. Oh man, I've turned off my mic.
Here, I can answer it. So the question
is that, generally speaking, how can an investor assess a deal, a startup, if you will? How can a venture capitalist assess a deal that is basing some of their technology on a platform such as Ethereum or Bitcoin or something related?
Yeah, so it is a good question. How do you value Ethereum? And then we'll move to kind of the dApps and NFTs that exist on it. Ethereum is something that a lot of traditional Bitcoiners don't like because as Bitcoin is very consistent, it's only had 3 or 4 protocol changes in its existence. You have the halving, which is the Bitcoin mining rewards split every 4 years. And it just doesn't change, right? That's what people like, that simplicity. Ethereum is chaos. It's always changing. The protocols are changing, new voting. Ethereum, the asset, went through a recent change called EIP 1559, which is Ethereum Improvement Proposal, which is just introducing a new dynamic. It's become deflationary where a small amount of ETH is burnt every time there's a transaction that's happened, right? So if something's deflationary, then the value keeps going up. So when you're looking at that from just the pure tokenomic aspect, you're like, how do I not buy something like this if every time someone spends a transaction, a piece of that gets burnt, and then you have thousands of applications that exist on it. You're like, this is eventually just going to keep mooning. So buying that, they're trying to turn it into like a commodity. So Ethereum to me is pretty solid. Bitcoin and Ethereum to me are the number 1 and 2. They've been pretty much signed off by the US government up until this point as commodities, although Ethereum's kind of still in the gray area. But when
you think Ethereum's going to get considered a commodity as opposed to a security?
It originally was, yeah. I think it'll still be a commodity. That's a very, very dense conversation because there is now a lot of lobbying and politics that are kind of intertwined in that. Of course, they did have the ICO, which would generally, in traditional sense, that would be a security, right? But when you're valuing apps, there's 2 different ways to look at it. You're either valuing an NFT company that's distributing NFTs a part of their collection, which could represent anything from art to gaming to a trading card game to a historical asset, etc. Or you have these apps that are building something. If they're going to go try and build a DeFi protocol, right? They're going to go try to build a decentralized trading service, or they're going to go try to build a decentralized Airbnb, or they're going to go try to build a decentralized Google, right, on top of it. First, you look into the tokenomics. Again, like you said, you look at the sheet, how much of the tokens are held back by the founding team, how much is allocated to marketing, how much is an ICO, how much is distributed freely. You look at who the backers are. Is there any legitimate crypto funds that are backing this? Is Coinbase backing it? Is Paradigm, who's like one of the big crypto VCs, is any company, like traditional sense, establishing some sort of grounds for this? You go look on chain, like again, this is the conversation we were having earlier with Dan. You need to do your due diligence because a lot of these people, right, this could be the next decentralized Airbnb that's called Jcoin, where they're just getting me to just promote it when realistically that's just all a front. So you want to go to Etherscan and see all the transactions that are happening to see if there's any kind of shady behavior. But you also want to look at this idea, it's called tokenomics, right? Which tokenomics is this idea of the incentive structure of how the tokens will be used inside of the ecosystem. Are individuals being rewarded? So for example, we'll use decentralized Airbnb or decentralized Uber. This hasn't been created yet, right? But if you have a native token in an app and you say, for this share, 70% of this token gets split to the driver, 10% to the app, and then screw it, 20% to the person who uses Uber, right? So now you're getting paid to use Uber, and then you're like, okay, what else can you do with that token? Is it just a payment mechanism? Is there some sort of gamification that's been added into it? What's the game theory? So there's a lot of different dynamics that are intertwined within it, but you also got to look at the overall market and see, like, is this being launched in the bear market? Is this being launched just during the bull cycle when everything is just going straight up? So there's a lot of different dynamics to it. But if I'm going to be honest, just from a personal standpoint, I've moved all to NFTs. Most of retail has moved to NFTs because their market caps are so low and they're more transparent. Because with fungible tokens, right, a whale could come in, which somebody who has a lot of money, could come in and create 10 different wallets and buy up 10% of the supply or 5% of the supply in all these different wallets. It could be the same person. With NFTs, there's different wallet addresses that are associated with the token. So it's much harder to obfuscate your trading activities in financial engineering with NFTs than it is for that. So most of retail's actually moved completely to NFTs because you can't have somebody like a JP Morgan come in and buy 30 or 40% of an NFT collection that has a $50 million market cap because it's just not worth their time, and it's going to take them much more effort to slowly leverage into this collection and slowly leverage out. So from a retail perspective, that's what makes NFTs most interesting. For the token itself, for a dApp, and I know this is kind of a long explanation, most dApps that exist in crypto don't actually need a token. So that's like the primary number one is like, does this need a token? For example, what would be a good one? Uniswap, right? So Uniswap is the #1 decentralized exchange in the world. It facilitates billions of dollars every day, where basically you could take any cryptocurrency and swap it for another. I could take Aave and trade it for Tether. I could take Ethereum and trade it for X dog Inu, whatever coin, right? Whatever the meme coin is of the day. Uniswap has a native token called Uni. It doesn't really do anything outside of a voting mechanism, but it's still worth $4 billion because people use the platform and it's become almost analogous to like a pseudo equity in the company, although the utility of it is pretty nominal. So you kind of have to look for these things, and this is where you get like really deep down the rabbit hole. But most of the projects don't actually need a token, or they'll create a token and then slowly create decentralization and slowly intertwine incentives over it. But yeah, that should be just number one.
This gentleman over here has got a question. Yes, you.
Oh, cool. I actually have two.
Sure.
First is, are there examples of people converting real world assets to a token? So not currency, but like if I own this, like can I convert it?
Yeah, that's actually a really good question. So this is something that I actively think about a lot, is this idea of, oh,
The question
sorry.
Is there a way to basically convert a real life asset and put a digital blockchain on it?
Yes.
So that its transaction value is really all on the internet versus in physical space.
Yeah, so this idea of, it's called real world tokenization. The first installments of it is like gold backed stablecoin, where you have this gold that is represented with this amount of cryptocurrency, and that can be kind of the treasury for it. This has actually become a little bit more prevalent in NFTs because, again, non-fungibility. You take a lot of real world assets, they're mostly non-fungible. Something like, there's like a NFT sports company that's selling. Here, for example, I was going to work with StockX at one point in time. StockX is the largest retail market for sneakers. They facilitate hundreds of millions of dollars a year in trading sneakers. We were going to work with them, and we were building a project to have their shoes represented as an NFT. But then StockX kept the shoes in a storage facility somewhere, and if somebody ever wanted those shoes, they could burn the NFT, and then they get the shoe sent to them. But then this allows traders to then have more liquidity in the market to trade the value that represents these shoes on an exchange. So this is kind of where you get this financialization, and you get to create markets out of things that don't have markets. For me too, you start getting in these like abstract ideas where, for example, this project that I've been thinking about a lot, that I think about very often is this idea of like, what can you tokenize in Vegas? What kind of like gaming representatives can you have? You can even take experiences and represent them in NFT. I actually talked with the Gaming Commission about this one time. Let's say you take a slot machine, right? Because the Gaming Commission has told me no on Bitcoin on the craps table. Just not going to happen. No matter how far back you go on the history of the transactions, it all goes back to Silk Road, right? So it's 7-8 years. I said, so what if you take a slot machine, and in the slot machine, you can win NFTs that represent real world experiences in the casino, right? Instead of winning $10,000, you win an NFT that represents 10-night stay with, then you get the DJ booth inside of Omnia with Calvin Harris and all these different things that are packaged in this one type of experience that's represented as an NFT. So this is where a lot of the innovation is happening right now, is trying to figure out where that bridge is between the real world and the digital world. Probably many billions of dollars that could be made right now if you find the good product for it, because there's just really not that many, but it's something I think about a lot.
Now, with that end question, Jake and the rest of the audience here that does need to get out on their Friday after, I will officially close the session here. Thanks so much for joining us.